Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, December 12th, 5:03 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days on November 1st and 2nd. You can see the trend gauge over here on the upper right of the screen. We've got market leadership flagged as green. Plenty of leaders acting well, just as you would expect in a strong growth market, although a little bit of a pullback today. Short term, all five of the major indexes are trending above their 21-day exponential moving average. So we got the green arrow there. Same with the medium term 50-day moving average. Also have all five above the 200-day moving average. Small caps, the laggard, just getting back above it late last week and staying above it this week. We want to see a close above the 200-day by the end of the week to get that arrow to green also. So what happened today? More rotation, but reverse rotation today. We're still within the trading range on the S&P 500. And this is why we like the S&P 500 as a core holding, because when these rotation days happen and then happen in reverse, all that rotation takes place within the S&P 500, whether you're going from growth to value, high beta to low volatility, tech to non-tech. All happens within the S&P 500. So that's the way we catch that, by focusing on ETFs that are tied to the S&P 500. So today's rotation was the big seven and big tech taking a bounce after lagging for about a week, a little over a week, and mid and small caps, which have been leading, taking a pullback today. That included leading stocks. Here are the numbers on the day. Big seven, six of the seven up, an average of 1.26% today. RG8 down nearly 1%. This is what cements what we saw in our individual portfolios, a little bit of a pullback in recent leading stocks. S&P 500 gap down 0.3%, rallied nicely early morning, but then gave that back, another failed breakout above that 45.68 level, ended up just slightly lower on the day. Equal weight had been leading the market cap weight, but not today. More pullback down, or not more pullback, but pullback more broad than just the market cap weighted index, is down 0.9 today. NASDAQ 100 up 0.25%, as you would expect with the big seven leading. Equal weighted down 0.6. Dow down 0.2. Mid caps and small caps, recent leaders, down between 1.3 and 1.4% each. Bonds bounced strongly today, offsetting the down move in global stocks. On average, ending up 0.13%, is the global 60/40 stock and bond index. In-house GROTECTION down approximately 0.17%. Let's get to some charts and then the tail of the tape. Here's the S&P 500. Let's go to we need a SPY, and let's go to a 5-minute chart here, and you can see the gap down, immediate strength coming in. At 10 o'clock Eastern time, we got a very weak JOLTS report. The JO in JOLTS stands for job openings. Big miss in expectations. Bad news, still good news in the market. We made highs of the day, but then three waves couldn't hold it. And again, it's above that 45.68 level. Three waves down. Disappointment again, but not surprising considering the move that we've seen, and tight into the close. Just, as I said, rotation today, but rotation in reverse. Let's look at the S&P 500 on this 30-minute chart that we've been showing lately and draw our customary lines. The move up, 45.21 to 25 on the downside. 45.68 is what we just can't get above. So you can see 1, 2, 3, 4, 5, 6, 7, 8, 9. 10 days consolidating after this move above this 45.21 pivot. That's after the CPI report on November 17th that launched this latest continuation of the recent uptrend. This gap still hasn't been filled. It doesn't have to be filled necessarily, but one thing we know is we're failing to make significant progress higher, but we're also not breaking down. So You've heard me say it a bunch on here. Consolidations should resolve, should, not guarantee, should resolve in the direction of the primary trend. We've tried that twice over the last 2 weeks, but unable to do it. You can see we're pausing right near this 4607 high back in July, where this most recent correction started, which we've obviously recovered from, but can't make any progress higher. Here's the NASDAQ 100. Relative strength today after relative weakness for about a week, after going sideways, not showing outperformance for about 3 weeks. So we bounced at the 21-day moving average. Good stuff. Apple also had a strong day today because Foxconn upped their guidance. Foxconn is a major Apple supplier. Reading between the lines, that implies that Apple's products are selling okay, no matter what you might read somewhere. But we did run into the declining 8-day exponential moving average on the NASDAQ 100, unable to get above that. Today's high is what we want to see, a break above that level, and we definitely want to see yesterday's low hold, as that corresponds with the 21-day moving average, which continues to trend higher. On the S&P 500, the 21-day now up through this 4,500 level, or it will be tomorrow. So that would provide an additional level of support in sync with the round number support should we pull back to that level. Let's go to the Dow. Dow down 0.2% today. That doesn't look right. Let's go to DIA. 360, that's the 36,000 level. Now mid caps, which had been leading recently, along with small caps. You can see the clear breakout there, the breakout that we didn't get from the recent range, although not quite to the new highs, but normal pullback after 2 strong days up on IWM mid caps. Same with MDY mid cap, same as IWM small caps. Breakout of the range, still lagging below the July highs. So still has some catch up to play, but normal pullback today. Let's go to the VIX. VIX down along with the indexes being down. Close to the declining 21-day moving average. We're going to monitor that level. Market does its best work below 15 and under the declining 21-day moving average. Let's flip over to the dollar. Strengthen the dollar today. Go to a 5-minute chart here. You can see up, then the dollar came off when that 10 o'clock data came out, but recovered based into the close. So a little bit of strength in the dollar over the last 2 days. That's hurt precious metals, as you're about to see. GLD failed breakout now. 2-day pullback still holding the 21. So that's GLD. Same situation with gold stock. GDX failed break above there, holding the 200-day and the 21-day. And SLV silver. Failed break there, 2-day pullback, bounced at the 21 today. Over to the leader today, that's bonds or bond prices, making higher recovery highs since we bottomed in October. BND, the broad bond index, TLT, the long bond, gap up there. And if the price is up, that means the yield is down, making new lows, coming off of that 5%, now under 4%, about 4.3 here now. Down 3% on the day is the TYX, TNX, the 10-year. Down 2.73%, also making new lows. Now, Bitcoin broke out, gapped up, continued that strength, up another 5% today. Strong breakout for Bitcoin. We're participating in this, got a 3% size in BITO. That's the inter-asset correlation that we cover in every video. Let's go to the tail of the tape now. I mentioned, we're on the bull case very clearly. Job openings below expectations. We got that pop, but it didn't hold. So 10-day consolidation on the S&P 500. 24th close above the 8 EMA. We're getting close though. We've undercut it 3 times and closed above it. Today the closest just up 0.2% above the 8 EMA. Normal to undercut and reclaim that. 23 days above the 21-day exponential moving average. Sectors, Big 7, tech, and Bitcoin. On the downside, retail, oils, semiconductors, and banks. The portfolio, pulling the weeds, watering or adding some flowers today. Two new flowers added, recent gaps up with strength. These have been working very well. IoT and GitLab today. We bought FNGU when we saw the strength in the FANG Plus index. That's the big seven plus AMD plus Netflix and Snow. We trimmed AMD, lagging the S&P 500 since we bought it, broke below the 120 level, closed strongly today, but we did trim it. We got 10% of that in FNGU, so that factored into that decision also, as we don't want to hold too many individual names. Here's our 10 names that we're holding in addition to ETFs, sector ETFs, and index ETFs. So upped our exposure from a 1.66 to 1.90. Bottom line on the day, reverse rotation inside the S&P 500, but today the big seven with the bounce. Mid caps, small caps, leaders weak. Rotation is good, means money's not coming out of the market, it's just moving around. Let's take a look at a couple of charts. After hours, MDB, a leader in, and formed a nice cup. This gap up here was in line with Datadog. Datadog kind of tracks Datadog. They're in a cloud stocks. Cup out from the breakout from the cup and handle. A little over a week ago, but down 4.65%. I looked at the report on their numbers. Their numbers look good. They upped guidance. It pulled back and held this 400 level after hours so far. That's also the 21-day exponential moving average. We want to watch this tomorrow as a proxy for risk. My expectation is that this gap down will get bought. The 21 will hold, and Mongo will continue to go higher. That's based on a cursory review of the numbers. They haven't had their conference call yet. Datadog, I said Mongo moves with Datadog. This has been acting great, continuing to bounce off the 8 EMA, down 1% after hours in sympathy with Mongo. ESTC, we took a starter position in this yesterday. Great follow through today. We added to this today, 4.63%. I mentioned GitLab, GLTB, gap up. We bought this twice today, once around 59, once around 61. So we're down slightly on it today, but a nice high volume, over 1,000%, 1,103%. That's a lot. Didn't make a lot of progress after that opening gap up. In fact, look at the 5-minute chart. It sold off, then made the move quickly, and then just hung around between this 58.50 and 60 level most of the day. But money very clearly thrown into that. Great numbers. They beat it. They raised good forward guidance and a nice breakout of a 97-day, 26% deep base. It's got leadership quality, look to it, especially with the way growth stocks are acting overall. So GTLB, NVIDIA, nice day today. Bounced at the 50-day moving average, up 2.32%. Volume not quite there. AMD made a lower low versus the 21. This is when we got rid of it, when we put some of that money, or all of it actually, into FNGU. By the end of the day, it reclaimed the 21. So not bad there, but note the relative weakness over the last week, which has been the case really with all big seven stocks. So some other recent gappers that we own that are just consolidating now. Here's Path, right at that 25 level. I mentioned ESTC, IoT. That was also a nice base breakout on earnings, consolidating right above the top of the base. Not so good today with Path, but just consolidating near that 25 level down today. We do own that. I mentioned ESTC. Crowd continues to have buyers coming into it on any weakness, working its way higher after its earnings gap up. PDD hanging anytime it ducks below that 140 level or close to it, it gets bought. Approached the 8 EMA today, closed at the top of the range. So that's good stuff there. Let's see, what else do we want to look at? How about one recent leaders not quite having a good day today. XPO, gap down, undercut, closed right on the 21 with some heavy volume. Didn't see any news on it, but that's not the type of action that we like. Coin had a big gap up, but then faded all throughout the day. Might be time for this to take a break after this big move up from 100 near the 150 level. Look at a 5-minute chart. You can see Strong in the morning, sideways. This is while Bitcoin was working its way higher and sold off into the close. Uh, we missed an opportunity to get into this off the 8 EMA 4 days ago. Just kicking myself for that one, but might get another opportunity, as this is very clearly one of the big leaders. Another big leader that gapped down this morning and had a very nice close was Affirm. You can see the move down here. Here was the beautiful breakout above that, and that was on the report that Amazon broke Christmas sales records, and Affirm was a massive part of that. People choosing to not pay now, but pay later in multiple installments. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a partner, email my interested in becoming a partner. Wouldn't you love to buy some privately held Revere stock? Nope, sorry, it's not for sale. If you're interested in becoming a client, though, dan@revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Always got our stops in place, but right now, optimistic about the way the market is acting. Those expectations can change at any time, along with the temperament of the market. For example, we break below this consolidation in the NASDAQ 100 or below 4,400 in the S&P 500, we will lighten things up considerably, lock in profits, reduce exposure, because we can tell the difference between a healthy market and a risky market. And with that, I'll wrap up the video for Tuesday, December 5th. This is Don Vandenbord with Revere Asset Management. Just the facts here at Revere, telling it like it is. Thanks for listening and have a great day.